Hello and welcome. You're watching Commodity Champions. I'm Manisha Gupta, and today we have a very special guest joining us right here in studios. Praveena is MD and CEO at MCX. Mr. Rai, hi, thank you so much for coming by. And it has been a great year for you, year 2025. I mean, if I look at the numbers, it has been the biggest ever turnover that we've seen, an average of 4.11 lakh crores. What really has led to these very strong numbers?
Yeah, the numbers are very exciting, and it's wonderful to be here, Manisha. I think we've actually practically quadrupled our numbers. So last year we doubled from about 1 lakh crore to 2 lakh crore, and this year we are already looking at 4 lakh crore as an average for H1. And I think this is really on the back of some tremendous work in the market. There has been a slew of launches, especially in the bullion segment, and these have been products that were created specific to market needs. And when the market requirement really cropped up in the last few months, it's played an important role there. We've also seen very active participation. So on the back of the larger macroeconomic trends, how India is doing, I think it's really the market participants who've also stepped in, and we are seeing higher levels of participation that our teams are also very heavily engaged with.
Well, yes. I also have your numbers in front of me. And when you look at the second quarter and the first half numbers, it shows strong growth, revenue, EBITDA, PAT. What really is driving all of these numbers, and how much of that really is structural?
So, we are growing at about 40% on the operating revenue side and 50% odd on the EBITDA side. This is a result, of course, of first and foremost the headline numbers we spoke about. But behind that is also all the enabling factors, right? The strong technology, the strong compliance framework, and certainly I would say the factors around the macro trends, right, that really drive the fit for purpose across all segments. So the energy segment is a strong one, continues to do well. The bullion segment, which has been a strong segment, has really performed above par. And the metal segment, has also, we're looking at sort of doubling in some of the metals there. And agree, while it's a much smaller space, also does its own role being fit for purpose there.
Electricity futures is another introduction that you've done in this year. We do understand that it is a long gestation product. How much of a readiness do you see in the markets for that, whether it is from the retail or the company part of it itself?
So electricity is something that we absolutely need in India. If we look at global markets, be it US, Europe, Asian markets like Japan, it's one of the new emerging commodity sectors across all markets. This product has been designed taking into consideration the requirements we have in India. The renewable sector is growing. In fact, I think we are really beyond plan when we look at the policy numbers on where we need to be for the renewable sector. So all of this comes together to say that this product, is a requirement for the purpose of hedging across producers, consumers, and the entire value chain there. So we are seeing strong interest. The momentum is right. It will take some time because it's about, financial players understanding electricity and electricity ecosystem, looking at hedging. A lot of internal corporate and governance enablement activities are also in play. We are looking at an average ADT nowadays of about 40-50 crores.
Okay.
And I think within 3 months of launch, these are good numbers. So I think we are positive that the product is designed for market. It's simple, easy, works on what we call the day ahead market prices, with a lot of data, back data, coming from a very established spot exchange reference. And all of this makes it good in terms of how it will play out in the long run.
But it isn't gold and silver and copper. I mean, it's slightly a difficult product in that sense, and a market too. How long do you think, and how much time are you giving yourself or your team to ensure that it reaches a point or a target that you would have envisioned?
It is very different from the other segments because they are tightly correlated globally, right? They are related and correlated, primarily because we also tend to be an importer in many of those segments. Electricity is ours, we produce it, we consume it, right? So it's really about India as a market and how that gets created. So it will take a little bit more time than what the other sort of segments have taken. But it's something that we need as a country, and I think we are positive about it. So we'll see these numbers certainly look much better by the end of the year, and I would say that within 2 to 3 years, we should see it starting to make its presence felt in the portfolio.
When you talk about electricity, and there are various other products, that the conversation has been about whether it is about weather and renewables and carbon credit as a market as well. Is that something MCX is looking at actively too?
There will be a number of related products for sure. And I think I don't want to comment on it because we are looking at a pipeline of products. So, we spoke about what we've done on bullion with gold and silver, the new sub-products that have been launched across the spectrum. In the energy vertical, we've launched electricity in addition to crude oil and natural gas. If we look at metals, we've done a relaunch on nickel because that was a very liquid and successful product in the past till there was a global situation during the COVID time. So that's something we've relaunched, taking a lot of feedback from the market on how that needs to be designed. And then looking at agriculture, where we've launched cardamom, so which has its own niche space, but very important for the spice segment and the players there. So I think these are going to be very important factors here.
So can safely say that there is an array of newer products and commodities that are in the pipeline that MCX is looking at?
Yeah. So I think these are examples of what we've done. There is a healthy pipeline and timed well, paced well, looking at when the market is ready. These will all come to market slowly.
Talk to us now about a difficult subject that you had to go through in the month of October, 28th October. And while you did continue to send out communications on what was really happening around that, but take us through on what really conspired and how have your communications with the regulator been on this right now?
Yeah. So I think if you look at context, right, and I'll just spend a few seconds on that. Our volumes, and we spoke about quadrupling of throughput, and similarly over the last 2 years, there has been a quadrupling of volumes as well, right? When you look at parameters like orders per day, orders per second. So MCX has been continuously investing in technology because we can see the momentum, we can see the growth, and one has to be prepared for it ahead of the curve. And what really has happened is not really the headline sort of numbers that we look at, but one of the parameters, the parameter definition, that created this bottleneck. So it created a threshold, unexpected, unanticipated, which created the issue that day. So it took our team, and I would say thanks to good efforts of a lot of trial and error that happened that day, that really led to the identification of the problem on the fly and a resolution in the time it took. Needless to say, it's not something that we want to happen again. So there are some very strong measures we've taken, in addition to all the work that we do on technology. So if I just run you through them. So first and foremost was the root cause analysis that got done immediately. I think within a day or two, we knew what it was and we communicated that as well. In addition to that, we've also gone to market and we've brought in a third-party assessment of the root cause so that in case there's something getting missed internally, it gets picked up. So that is also completed. And it has corroborated the root cause that was identified earlier. The next step is to say, hey, this is looking at the root cause, but why don't we actually put the whole system through a testing so that with real volumes, we are able to identify any other such threshold parameters. So that's something that is currently in process, will get completed very soon. The third is to look at a sort of expert panel along with third-party assessors to have a fresh look at where we stand from a scalability and resilience standpoint. So yes, the platform has been continuously upgraded to come to where it is today, but we have to make sure that it's fit for purpose as we look at scale going forward. And I will say, as we continue to invest in technology, the most important thing is the voice of the customer. And in our interactions, and we've had a number of interactions with our stakeholders. Most important stakeholders are our members and participants. So what I heard is, you have to be ready for 10x, right? And I think that was really a, a rallying cry.
A ringing thing, huh?
Yeah, and I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now.
Yes, as you said, your conversations with the industry, the stakeholders, the intermediaries has been on the positive side. But having said that, there were always also various statements saying, or, memes and WhatsApp messages suggesting, oh, the exchange isn't working. Maybe you can go to another exchange. MCX is perhaps 98 to 99% of what it does in this market share. Dealing with that, they wouldn't have been easier. What have your also been engagements with this SEBI? That's another thing that the markets are very, very curious about.
Yeah, so I think first and foremost, engaging with our participants, right? And we spoke about that. I think that was super important, and we've given that top priority.
And they've stuck with you all these years.
Yeah, I mean, they have stuck with us, and I think we are very happy and privileged to be part of that, ecosystem. Now, as far as the regulator is concerned, there are some processes, there are methods and timelines within which certain submissions have to be made, and so on and so forth. So all of that will follow is following process, and will sort of play out in due course.
What has been the engagement till time? What is it that is going back and forth with the regulator on that?
I think those are part of the standard, SOP discussions. And I think pretty much in line with whatever I have explained till now.
You also earlier spoken about the 5-point mitigation plan. What are the key actions therein? What is it that you're looking at in sense of capacity building? You talked about 10x there. What work is being done there? What are the other timelines that you have in place?
Yeah, I think this is the 5 points that I mentioned some time back. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single short jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months as a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
I also want to talk about other products. The other launch that you had this year was Bulldex, and a great year to have it because the gold and silver prices were doing best what they do. Very volatile, best year, all-time highs into that one. How are you looking to sustain it in a year, perhaps next year itself, when we may not be looking at that kind of volatility or price moves for that matter?
I think the commodity sector is at an early growth phase. When we look at global markets and we compare to where we are in India, we're still at an early growth phase. So I think when we look at the kind of products that India needs beyond what we have today, and when we look at the kind of participation that is also available and required, the measures to bring in more commercial corporate participation via hedging. If you look at all of these, so yes, there is a headline macro parameters that will always play a role, but across 4 segments and the product and participation, I think we are in a good place.
All right. Mr. Rai, please do stay on with us. We have to take a very quick commercial break, but we'll come back and we'll talk to MCX MD Praveena Rai on her plans going forward, on how do the next 3 to 5 years look, what are the visions from here, and especially what is the next year looking like in 2026 after this very short break. Welcome back. You're with us at CNBC TV18. We have with us in our studios Praveena Rai, who's MD and CEO at MCX. Mr. Rai, we spoke about gold and silver, and you spoke about metals as well, on how they have done quite well in sense of consolidations. The efficiencies are building great, and you're looking at participation coming in on the stronger side there. What is it that you're looking at to growing from here on when it comes to the existing products? We've seen you introduce more financial products within the instruments itself, whether it has been about quarterly, monthly, options also. What is it that you're trying to do now with the existing commodities? Where do we go from here?
I think our existing commodities are doing well. For example, one of the steps we've taken on metals, hearing the feedback from our market is to consolidate warehouses, right? Because there are some challenges around GST when you have multiple warehouses. And this is more about procedural challenges. And it's important that the warehouse is located for suitability of supply and consumption. And we have data because these have been around for a while. So we've really looked at where it matters, taken feedback from the industry, and consolidated. So for example, in copper, there is a single warehouse now in Thane. Same with zinc, aluminum, etc. So they've also been consolidated. Some warehouses which were not required have been reduced. So we've looked at a difference between the trading unit and the delivery unit with the new nickel launch. This will make sure that there is access and availability reach for the small, medium sector participants for whom large sort of capacity is not either required or affordable. So I think these are some of the steps that we've taken when it comes to the metal segment. And similarly, work is on across all the segments. I think we are very fortunate to have participants, members, great teams within MCX, all of whom understand the domain very well. And I think that's when the magic happens, when they all come together. And that's how the creation will be. So I think it will be a co-creation exercise. It will be a consultation exercise. It will be a collaborative exercise.
Okay.
And so we may have some theoretical ideas looking at commodities and product design based on scale, based on volatility, based on global studies, based on what we think India needs. But ultimately, it will be the coming together of all of this that will answer this question of yours.
So there are three P's really: prices, which you won't talk about, and products you have spoken about. The third really is about participation. How are you looking to deepen that one? Because if you look at SEBI regulator, and he's been talking on various forums, he's talked about pension funds perhaps going to be allowed in commodities. There has been conversation about on how we can perhaps be price makers and not price takers. A lot of conversation really going around. How are you looking at that part? And the second, of course, is about hedging mechanism, allowing or enhancing or ensuring that you have SMEs and MSMEs being part of this.
Yeah. No, I think let me pick up on the price benchmark first, right? Being price makers, that's very close to heart, very close to my heart. Because in India, if you look at, for example, bullion, pretty much, I think MCX gold prices, for example, are the
benchmark
benchmark. They tend to be used across the industry, so on and so forth. But we do still have international benchmarks, right, getting used within our industry as references. So I think there's been a consultation paper. Of course, we've given our input, so has the industry, and we are looking for some of that to play out. And I would think bullion is a starting point, and we should be looking at this across the spectrum. Because when we look at international prices, ultimately India prices are, duties and sort of logistics, but ultimately there is a India demand supply element that comes in that creates that premium discount. So no matter how correlated we are with international markets, there's nothing like creating our own price benchmarks. Your question on participation, there is scope for expanding participation. Today there is good participation when it comes to proprietary firms, when it comes to HFTs, when it comes to traders who are trading on various commodities, when it comes to retail. The scope, right, to really expand participation across many other segments who are extremely active on the equity side is strong. And we see that working globally, but it's also a big and important opportunity for India. It will have to happen in a calibrated manner, looking at what are the rules and sort of frameworks within which they have to operate. So I believe that we'll be looking at some, we hope that we'll be looking at some positive momentum there.
When it comes about participation, it also is not just about the smaller hedgers, it's also about corporates and hedging mechanisms that are being created in India. We still do know that after so many years as well, there are big corporates which still are hedging outside the country. While there is a law, and of course they have to now tell on what are they hedging and how much, and whether or they're hedging or not to begin with. But how is the exchange really looking at policy and framework changes within that?
Yeah, I think it's very important that the platform becomes more and more relevant for large hedgers, while they may be hedging smaller components. And for that, I think if there is some sort of incentive mechanism that can be created, that would be wonderful. Certainly cost of hedging in India, straightforward in the rupee, without all the currency, hedging, et cetera, is a no-brainer.
Right.
But change is always a transformation. And I think we will see that happen step by step.
How are you looking at the growing curve for MCX from here on? What is it that Praveena Rai is thinking about for the next year, 2026, that is the near term, and then a 3 to 5 year as a horizon?
Yeah. So I think 3 pillars, and I speak about them all the time. Number 1, the solid foundation is the compliance and regulation. So our own compliance as well as the integrity of the market that we operate. On that bedrock is really the enabling operating framework. So operational excellence, we spoke about investment in technology, our vision for how we want our technology to work, and where do we see that being an enabler for growth. And then finally, it comes to products and participation. We spoke of products, we spoke of participation. Yes, we will be looking at a pipeline of whatever is required in the commodity space. We will be looking at, also looking at capacity building when we look at participation, because that's going to be very important across the industry. So these would be, and capacity building, I would put it in that little longer time frame. It's not a immediate activity, but these would be the simple actions, and the devil is in the details, and it's all about execution. The shared purpose, and I come back to the point about shared purpose, and I hear it all the time. So I think to have an industry which has that shared purpose, our teams, who are really passionate about making this happen, we'll have to execute this through.
Also, Ms. Rai, when you look at overall commodity markets in India, it still is a very niche product, would you say? It's been around for decades now. And yes, it still is at an infancy, if you may say so, as compared to the other financial instruments and other financial markets, though. But where do you see overall commodity as a market growing from here?
Commodity as a market is in its early growth phase. So yes, we've been around for a while, but sometimes you have to wait for the time to come, right? Where our markets have matured. So there is now a sort of diversity of participation that is available. And between all of this, growing interest in the commodity space, both as an investment asset class, as well as from a hedging standpoint. And I think that's really where this is coming together now. The timing is right.
The timing is absolutely right, especially given the fact what we've done in 2025 and 2026 seems equally promising when it comes to commodity as a segment, not just India, but in the global markets as well. Mr. Rai, as always, thank you so much for coming by in our CNBC studios and having that conversation. Appreciate your time.
Thank you.
And with that, that's all the time that we have on this segment of Commodity Champions. Thank you for watching.